Hello and welcome to this Wednesday's morning market briefing. Got lots to talk about, but firstly, Joe Biden under new pressure to quit race as Democratic disquiet spreads, as well as that Jay Powell says US needs to cut deficits sooner rather than later. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Joe Biden and the Democrats. Now, Joe Biden is now facing renewed pressure regarding ending his re-election bid. This comes following a key Democratic lawmaker calling on him to drop out of the presidential race following his poor performance in the debate against Trump last week. Now, I believe we spoke about this topic in yesterday's morning market briefing. If it wasn't that, then we spoke about it, of course, in the weekly market briefing. As of course, this topic has now become of great significance, as of course that debate that we did talk about between him and Trump has had great ramifications following the debate, basically, as ultimately Joe Biden really hasn't performed to the extent that someone that is running to be president kind of needs to perform to, and as a result of that, we've seen a great deal of Democrats even start to kind of fall out of favor with Joe Biden and start to call for Joe Biden to basically hand over the torch to a younger and maybe more alive seemingly lawmaker, and that's that kind of thing, so that kind of people can rally around that person more so than they can rally around Joe Biden, who many people say has completely lost his flair now that he is kind of more elderly. Ultimately though, we've heard repeatedly from Joe Biden since the debate that there are no issues at all, that was just kind of one-off debate, and that ultimately Joe Biden wasn't going to stop for anything, and he was still going to push ahead despite kind of what the public were worried about. Ultimately though, some people, the rumors starting to spread, as this article does kind of note, with of course recent Democratic congressmen kind of meeting with Joe Biden to discuss the current issue, and to discuss the topic basically, as Joe Biden does kind of look for allies during this period of hardship, these hard times for Joe Biden and the Democrats, as of course linking back to that debate that of course we've spoken about before, which took place last week. Joe Biden really did lose, as many people, as most voters or most respondents to surveys following the debate did say. And I believe the kind of figure for how many of those respondents believe Joe Biden lost was around 63-65%. So a very significant loss, of course, as more often we see that around the 50-50 mark for in most election years. And this has kind of just added fuel to the fire and allowed Trump to kind of really push harder on the kind of gains that he's already had going into this election. As we've noted many times throughout the year, that Trump has kind of been that leading kind of possible leading candidate basically for the presidential election, as once he came out of that primary period against Nikki Haley, all the polls were really starting to show Trump leading on certain sectors, especially the economy, which really does drive the elections most often, as many people seemingly feel very kind of disillusioned with the kind of Democratic leadership, or at least Joe Biden's presidency, ultimately because of the kind of economic issues which have really been experienced around the world. And we're somewhat seeing a similar reaction in the UK, of course, where we've got the general election this week, where we've had the situation of high inflation as we've seen in the US, and ultimately that's weighing massively onto voters' minds. And unlike in Britain or in the Eurozone, where we're starting to see inflation decline now and reach around that 2% central bank target, well, in Britain that it actually has reached that 2% central bank target, whereas in the US inflation is still around that 3% level and represents this kind of stubborn inflation within the economy. And whilst that is somewhat true, it is also important to note that whilst under Joe Biden and throughout these kind of period, throughout this period of kind of hard economic times, growth has remained strong within the US economy. There's been strong full employment. And that's kind of another key point to make, is that, inflation is really what people feel within an economy often, and therefore that's what's weighing on people's minds, not the actual statistics behind, how well economies are doing and that kind of thing, which is why seemingly Trump has been leading into the polls, and then this debate has just weighed on that further, boosting Trump in the polls, especially now that we've, of course, as we spoke about in yesterday's morning market briefing, especially as now Trump has been granted immunity from the Supreme Court for unofficial acts under his presidency. So, a very interesting topic, of course, and, should Joe Biden fall out of kind of the race for, candidacy, or whatever, kind of happens as a result of this, that will massively affect the markets. And I think this topic alone is already going to be affecting markets, especially volatility wise. So definitely keep your eyes on this topic and stay updated. With Democratic state governors also now engaging in a White House meeting in which they're discussing Joe Biden's candidacy. It was the Democratic congressman from Texas, Lloyd Doggett, who publicly called on Biden to step aside from the presidential race after he said that there's too much at stake, with a statement also being made just as key Democrat governors arranged to meet Biden over the course of Wednesday, in which they were to discuss a coalition around the president's leadership. Ultimately, this worry from the Democratic Party is largely, if not completely, stemming from Joe Biden's debate with Donald Trump last week, in which Biden frequently mumbled and lost himself whilst arguing. As a result of such a poor performance, Biden's approval rating among voters plunged to an all-time low. Certain surveys following the debate showed that 65% of viewers felt Trump won. In fact, a survey from CNN showed Biden's VP Kamala Harris would fare better in a matchup against Trump than Biden will. As for other key contenders to the Biden leadership, the names of Gavin Newsom and Gretchen Whitmer have been floated as potential replacements. So a very important article there, a very important topic. And of course, should Biden fall out of this kind of leadership race, then ultimately that's going to affect markets greatly. And it's going to weigh on the way that polls, are kind of shaping up as well, which affects the way that voters and traders ultimately perceive the future economy of the US, and therefore factor it into the market, which is why, of course, this topic is important to cover. So definitely keep your eyes on this topic. Next to talk about, though, is to do with Jerome Powell, which is, of course, usually the most important topic on this channel, as of course he does kind of dictate the Fed's monetary policy outlook, and therefore that's always very important to note. But interestingly, this article kind of links to another topic that we've been talking about quite extensively and quite frequently recently, basically, as a result of kind of this issue growing in significance, it does seem like, with Jerome Powell now warning that the US economy is too strong to keep running extremely high deficits, and has ultimately urged the government to address this. This comes in a recent speech at the ECB conference in Sintra, Portugal, where he stated that the government needs to address the fiscal imbalance sooner rather than later. Now, of course, this topic of a fiscal deficit, growing levels of debt within the US, has been a topic that we've been covering on this channel for quite some time. But really, over the past year, past few months, more like, we've really started to kind of mention it more and more, as these key economic bodies, key regulatory authorities, key credit ratings agencies, and now, of course, Jerome Powell, have all warned of this kind of growing issue, this path that the US is seemingly on with regards to their deficit levels, and ultimately their overall debt burden, as ultimately we're kind of now nearing those levels not seen since World War II, I believe, and ultimately we're starting to breach above that 100% debt to GDP ratio. And therefore we're starting to now move to levels which many economists, many regulatory authorities, many credit rating agencies have deemed unsustainable. And this is kind of what this topic, this article, does cover, as it does kind of mention how Jerome Powell is kind of echoing that belief once more, as this is a kind of very important topic to the US economy, and a very important topic as we speak, because ultimately, as we spoke about in the last article, Trump and Biden are going head to head, proposing different economic policies and that kind of thing. But ultimately, as these key economic bodies have noted, both parties aren't really financing their deficit in the way that someone would need to at this current time, and therefore many of these bodies are worried that the fact that is about the fact that basically these two potential presidents of the United States are basically promising to basically deepen the deficit, and worsen the kind of situation for the US debt levels, and therefore many are starting to worry about the situation that the US is going to be left in come it's 4 years, come 8 years, come 20 years even, once kind of this debt grows and grows and grows, just as a result of the deficit continuing to grow, and the deficit piling onto the last deficit. So a very important article, and something that I think is important to kind of understand, because whilst it doesn't kind of mention the usual topics that we're usually talking about when we're talking about Jerome Powell, like inflation, interest rates, and that kind of thing, it still allows us to better understand the way that Jerome Powell might adjust his monetary policy to deal with political changes, which is very important to, of course, understand. With this providing traders and the general public with another sign that the Fed is increasingly concerned with the extremely high spending levels of the US government. He went on to state that the Biden administration was taking excessive risks by running what he called a very large deficit at a time of full employment, with him rounding off the statement by saying you can't run these levels in good economic times for very long. He did note, however, that the level of US debt has been sustainable, but the path that the US is on is in fact unsustainable. So a very important concluding statement there, and something to definitely think about, going into the future, and especially during this period of the US presidential race. So definitely keep your eyes on this topic. Very important to, of course, keep your eyes on. As always, next things to talk about as we finish with the articles. Pardon me for that. As we've finished all the articles there, next to talk about is the charts. We're like always, we're starting on the US 30. Like yesterday though, not much is happening on the US 30, as we did start off the week around the 39153 level, and now prices only up to the 39311 level, after basically ranging around, consolidating throughout the entirety of the first 2 days of the week, and therefore there really isn't much to say. Over the course of yesterday, price dipped to the downside once again, and as we've seen repeatedly now, price reacted to this lower level of liquidity, then swung back to the upside, breaking just above this key area of liquidity and resistance, and now price is seemingly stalling out and preparing to then once again swing back to the downside. So we'll have to keep our eyes on it. Maybe the 1 hour is kind of easier to analyze at the moment just because of these ranging motions, but definitely keep your eyes on the US 30. Next talk about though is because we are receiving the FOMC minutes from the US today, and of course the significance of that with regards to the Fed's monetary policy outlook and US markets does make this a very important data point or news point to listen out for, and that's something that will definitely affect the Dow Jones, so definitely keep your eyes on that. Next to talk about though is the dollar, which once again we're talking about this kind of rally, this trend that we've seen the dollar kind of sit in and form over the past few weeks or so, and definitely this kind of area is becoming far more interesting. As in yesterday's morning market briefing, if you can remember, I did note how to start of the week price did breach below this trend line, kind of surprising us but not surprising us at the same time, because ultimately that key area of liquidity does line up there, so it kind of would make sense for a false breakout to take place around that level to create that liquidity for an upswing, but ultimately I think the kind of interesting thing to now note is the fact that I did note in yesterday's morning market briefing that we could possibly be moving to the upside, yes, but ultimately rounding off and then preparing to swing back to the downside, so forming the second shoulder for a head and shoulders pattern, which is of course that kind of bearish signal that many of you will know. And that's kind of seemingly what's forming now, as this level that was formed over the course of yesterday around the 106.052 mark is below those previous, recent highs made at the end of last week on Friday and Wednesday, and therefore, should price not return back above those levels, then really we've rounded off price and we could be preparing for a swing back down to the downside. So definitely keep your eyes on these levels that are being formed, as price seemingly also reacted to that 78.60 level, which was kind of marked out where price did kind of stall out and then reverse. So definitely keep your eyes on the dollar. Very interesting moves at the moment. Next to talk about though is Euro USD, where sadly there isn't too much to say, as price is kind of stalling out and sitting just between these two liquidity zones. Really not much is happening here, so it's quite hard to kind of note what could be going on. Once again though, we are receiving some very important Eurozone figures today with regards to services data, as well as, of course, as I mentioned earlier, the FOMC minutes, so that will definitely be affecting Euro USD, but really we haven't received as much action, or we haven't seen as much action as we might usually expect on the euro, because ultimately yesterday we were receiving a great amount of data from the Eurozone, but seemingly it's had a little effect. So definitely keep your eyes on the Euro USD anyway, but yeah, not much to say there. Next to talk about though is pound yen, which just won't stop this continued push to the upside. I did kind of note in yesterday's morning market briefing how price was kind of rounding off. It had kind of spiked to the upside somewhat, and tapped that level around 204.83, and then kind of somewhat sold off from that level. But at that time, we hadn't seen a dramatic sell-off, and so I did kind of say that there was a potential for a retracement now, but definitely wasn't certain. And we have not seen that retracement, and that kind of upward push continues to take place as price continues to rise to the upside and nears. In fact, over the course of the past few hours, price has pushed slightly above the 205 mark, and is now returned below it. So it'll be interesting to see whether price can hold above that very key psychological level over the course of today. So definitely keep your eyes on those levels for pound yen. Next to talk about though is Bitcoin, which has seemingly reacted to that 61.80 that we did note to start off the week, and price has now reacted to that over the course, of course, on Monday, and now on Tuesday it's continued to play out as price does sell to the downside. At the same time though, we haven't seen a dramatic sell-off. We haven't seen the sell-off that sometimes we see from these key fib levels, so definitely there's still some potential that price maybe reverses once again and continues back to the upside, but still keep your eyes on Bitcoin. Very interesting moves being made off these fib levels. Next to talk about though is gold, which is somewhat ranging, consolidating, stagnating on the 4-hour time frame. So not much to really say on the 4-hour. Once again though, the FOMC minutes that we are receiving today will affect gold, so definitely be listening out for that. And of course all the news from key conflict areas around the world is also being factored into gold, so definitely listen out for that. But I think it's important to kind of zoom in on the 1-hour, when of course price is acting in this kind of way, as ultimately once we zoom in we can start to note these kind of regional or very recent kind of liquidity levels that have been formed on these lower time frames, and so we can better judge these moves that possibly might take place, and when they do start to take place we can better understand them. So definitely keep your eyes on gold. Very interesting moves being made on those lower time frames, not as much on the 4-hourly. Lastly to talk about on the charts though is of course oil, which as I said in yesterday's morning market briefing, had broken out this key liquidity zone and range, was on the upswing, and we were kind of really starting to look at these higher levels that we'd previously seen around April, during times of heightened tensions, especially within the Middle East, which is heavily factored into price, of course. Now over the course of yesterday, instead of price continuing this massive upswing, we've seen price somewhat retrace on itself and is now somewhat reacted to that 38.20, or possibly is on the retracement now, and could react to these lower levels around the 50% or as I previously mentioned, that 38.20, but that 50% does line up with a more key liquidity zone, so possibly that's the area for price to react to next. Definitely keep your eyes on oil though, very interesting moves being made, and a retracement will be very interesting to see whether that does play out. Lastly to talk about though is of course the economic calendar, where we are receiving quite a bit of economic data today. Now firstly, we are receiving the Aussie retail sales figure, followed by some Chinese business and services figures, as well as that we're seeing the Spanish, Italian, French, German and Eurozone services figure, so lots of Eurozone services data there, followed by the British services figure, as well as the Spanish consumer confidence figure, and followed by that across the pond we're receiving the US mortgage applications figure, as well as the US and Canadian balance of trade figure and the US services figure. Followed by that, and to end off the day, we are receiving the FOMC minutes, which I did to allude to earlier. And that's the kind of key thing to listen out for today. But that's all to talk about on the economic calendar. We've got lots in the articles, lots in the charts, and lots of the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.